Let's go ahead and get started. Thank you, as always, for being here, everyone. I know sometimes it's hard to get away on a Friday afternoon, but we certainly appreciate it. We're going to talk veterinary insurance today. If anyone can make it fun, it is Bill Butler. So I promise you guys a good time. His knowledge is vast. He literally wrote the book on veterinary insurance. There you go, right? Like if you don't have a copy, you should. Um, He's a straight shooter. I think he's not going to steer you in the wrong direction. He's not going to overinsure you or underinsure you. So I think that he's an excellent resource that we have, and we are very excited to have him here today. So, Bill, please entertain us all about veterinary insurance. No pressure.
Great. Well, I think we have a mix of practice owners and future practice owners and practice managers here. Um, just as we get started here, if you have questions, throw them in the chat. We'll have time to get them at the end. So just make sure to throw those into the chat or the Q&A as we move through this session. Everyone can see that. Throw a yes in the chat if you can see this, or just say yes on the unmute yourself and say yes. Yes, Megan can. All right, great. Well, at Butler Vet Insurance, and as Megan highlighted, my name is Bill Butler. I did write the book on veterinary insurance for the veterinary marketplace, and we have a Protect Your Practice blueprint. Now, obviously, in the amount of time we have today, it is going to be very difficult to take a very deep dive in a lot of these topics, but we're going to crush 4 hours in the next 50 minutes. So I need everyone to buckle up, have something to write with and write on. Make sure to have your questions ready, and I'll have an offer at the end for those who want to take a deeper dive. And basically, we created this Protect Your Practice blueprint to simplify what veterinarians need for kind of an insurance 101. Obviously, this isn't going to encompass every practice or every scenario, but it's a very high level view of the major coverages most practices are going to need, regardless if you're a mobile practice, a mixed practice, a large animal practice, or just your run-of-the-mill companion practice, which is like the majority of veterinarians out there. So we're going to dive in. We're just going to kind of work through these in order, and we're going to talk about business general liability first. Business general liability, or CGL, pays for a number of things. It pays for damage or injury to another person. So think slip and fall. I'm in Minnesota. We have these in this northern part of the country. We have slip and falls. In fact, we had one yesterday. This was an actual employee slip and fell, but had a slip and fall a couple years ago in the parking lot. Patient client slipped and broke their leg in the parking lot. This is going to pay for damage or injuries to another person, slip and fall in the lobby, that sort of thing. That's the major exposure for veterinary practices, is the slip and fall injuries to clients. Damage to another person's property. Animal Bailey is going to pick that up for the property portion for animals, but if you damage somebody's property, light pole falls on their car in the parking lot, wind blows it over. That's gonna damage somebody else's property. That's probably the best example of that happening at a vet practice. So very low exposure, but one thing that general liability does is it provides legal defense. So it pays for the attorney to defend you if you're sued by another party. And for you to be negligent and for their negligence to occur, you had a duty to prevent the injury from happening. There was approximate cause, meaning that something happened, and then there's a financial loss. Now, it doesn't mean that your insurance company won't pay to settle, but in order for you to be negligent, those three things need to happen. And so it really boils down to how much you need, how much you are comfortable with, and do you have enough to protect your business assets? And when I say business assets, a lot of veterinary practice managers and owners and partners think, oh, that's my property. It's also your revenue. So if your practice is generating 1.5 million in revenue with 3 veterinarians, but then you also have $700,000 in property, you don't need $1 million. You need $2 or $3 million in liability coverage, because if I slip and fall in your parking lot, and I think if we've all watched TV recently, we know there's plenty, or driven on the freeway, plenty of personal injury attorneys out there who would love to get access to your business assets, and you want to protect all of them. So if I know that you're generating 2 million or have 2 million in business assets with all of your property and revenue, I'm going to sue you for $2 million. And generally, the occurrence limit, which is the per incident limit on a veterinary policy or most business insurance policies, is going to be $1 million. You can buy more than this. The aggregate limit, so the most they'll pay out for any one occurrence is $1 million. The most they'll pay for any one policy term is $2 million. Then we have completed products and completed operations. This doesn't really apply for veterinary practices because your product or completed operation is your care of my animal. And that's going to fall under veterinary professional liability, which we'll get to in a little bit. So this coverage really doesn't have any sort of application generally for a vet practice. Fire damage liability is something your landlord, if you're a tenant, may want to see. And then medical payments coverage. So let's go back to that slip and fall example. I slip and fall in your practice parking lot and I sprain my wrist. I don't break anything. It's just a sprain. And I need an x-ray and an air cast. That's going to be a medical payment claim versus this $1 million claim up here where where I'm suing you for a ton of money. I just need my medical expenses covered. I'm not missing time from work. I'm not missing going to my kid's baseball game. So the difference between medical payments and liability or this occurrence limit, is this is kind of go away money. Means, hey, I'm willing to, I'll sign a piece of paper saying you'll take care of my medical bills. I promise not to sue you if you pay for them up to $10,000. Or 5,000. 5 or 10 is generally the coverage. So this is generally what you'll see for liability on a business policy. This can also be a 2 million, 4 million limit instead of 1, 2. And if you need more than this, you can buy an excess liability policy or an umbrella. Umbrella policies for companion animal practice generally run about $400 to $500 a year. So when you're talking about protecting $1 million worth of your business assets, it's a very good value to buy enough coverage because it's generally the lowest priced coverage you're going to buy in the policy because the likelihood of a claim happening here is very low. So as I said, it's super easy to protect your assets. It's just determining how much you need, how much you can afford. And generally for most veterinary practices that we work with and come across, the affordability for this coverage is it's very affordable. And so, just making sure that if you're generating 1.5 million in revenue and you have 500,000 in business property, you're going to want to buy 2 million in liability coverage. And then how much you're comfortable with. You might say, I'm okay with the $1 million. I'll roll the dice and I don't want to pay for the extra money. As long as you're comfortable with that, just knowing that you're underinsuring or that you're taking on some of that risk yourself. If you have questions about the liability, make sure to throw them in the chat. We are going to keep rolling and we are into, so I make sure I'm on time, business property coverage. And so when you think about business property coverage, it's going to cover things like your building or your tenant improvements and betterments if you're a tenant in a strip mall as an example. It's going to cover your business personal property. Business personal property is things like all of your inventory, your practice equipment, your surgical equipment. Everything in every drawer in your practice is your business personal property. And what happens is this is often underinsured, which we'll chat about in a little bit as well. It's very important to make sure that you've got all of your business property insured because at the time of loss, it's too late. You need to make sure that you have this number accurate on an ongoing basis with your insurance agent or agency. And then additional coverages. On a business owner's policy or BOP, which is what most veterinary practices are insured under, these additional coverages are usually 2 or 3 pages worth of endorsements and or additional coverages. It's going to cover spoilage. It's going to cover equipment breakdown. It's going to cover sewer backup. It's going to cover fine art and artwork. It's going to cover employee theft and crime. So these additional coverages are generally included, but the 3 that I have listed here with spoilage, equipment breakdown, and sewer backup are the 3 that you want to make sure that you've got adequate coverage on your policy for, because a veterinary policy, a standard business owner's policy for every business out there is going to come with $5,000 to $10,000 in spoilage. Some policies come with more depending on how they're endorsed, but I've seen where veterinary practice has $25,000 or $30,000 in vaccines in their fridge, $10,000 in coverage. Power goes out, fridge stops working on Saturday. You show up on Monday and you've got $30,000 worth of bad vaccines. You've only got 10,000 in coverage. So just making sure that that spoilage coverage, that's a biggie, to make sure that that's up to date and you've got adequate coverage for your vaccines, because that is going to be a different coverage at loss from business property. So, 4 different vet practices here across the country, talking about insuring the building. And with labor and materials, especially right now, won't get into politics, but labor and materials and inflation going up. And so keeping a very close eye on the insurance to value, which is how much you need to rebuild your building. So for our practices out there who own their building, this is what's going to be called the insurance to value. So insurance to value is how much it costs to rebuild the pre-loss conditions, not the market value, based on labor and materials. So how much does it physically cost to rebuild the building? You don't need to rebuy the parking lot. You don't need to rerun the sewer. You don't need to rerun the utilities to the lot edge, curb and gutter, parking lots, this sort of thing. Don't need to be rebuilt. There might be some, if there's a fire or this type of thing, there may be some of those that need to be replaced or repaired. But from an insurance perspective, it's important to make sure that the insurance to value in the commercial world, is what we call it, is adequate for your building. And so if this hasn't been reviewed in a number of years, it's important to have a conversation with your insurance agent or agency, insurance carrier, to say, hey, is my building adequately insured? Based on current labor and materials. As we've seen, there's a lot of fluctuation happening with cost of goods, especially cost of labor and materials. And so making sure that this is an adequate coverage and appropriate. I hope you can't hear that. We have a fire truck going by, but for building insurance, also, if you're the tenant, let's say Bill owns the building and Bill's Building LLC. And I also run the veterinary practice, Bill's Veterinary LLC, and I lease to myself. There's 2 ways to insure that. One is under the practice, insured under the practice, and the other is insured as a lesser's risk. I actually just wrote an article about this in today's veterinary business about insuring the building separate from your practice policy becoming less common or harder to do, higher cost. And so it's more and more common, even if you have a separate holding company, to insure the building under the practice policy here. You're going to have a triple net lease with yourself, meaning that you're paying the utilities, you're paying the taxes, you're paying the building insurance, and that's all coming under the practice, even though it's held by a commercial property company. One thing is to make sure to add the landlord as additional insured or additional named insured if there's a loan on the building or the land, and making sure that landlord, if you are the landlord to yourself, that you're additional, it should say named insured here, additional named insured. And that's going to provide coverage to the landlord the same as if they were actually buying the policy themselves. So it's kind of unique. This is starting to happen more and more versus back in 10, 15 years ago. You'd have a policy for the building under the holding company, and then the practice insurance would insure the veterinary practice and not the building. So obviously more and more common these days, we're having veterinary practices who are in a strip mall. And so there's going to be some leasehold or tenant improvement and betterment. So how much money do you need to rebuild if you lease practice space? So we just moved into this office space. We moved in last July. The landlord paid for the build out and built the cost of the build out into our lease. So I didn't have to pay out of pocket. It's built into my lease to have the building remodeled. However, this building burns down and I need to move to a new location, and the new landlord says, here's 3,000 square feet, but you have to rebuild it yourself and it's where I want to be. Now I've got to take out a business loan to do that build out or that tenant improvement and betterment. And so making sure that if you are in a leased space, that you've got, I'm going to jump back a couple slides here. Tenant improvement and betterments. Tenant improvement and betterments is your cost. Even if you didn't pay for it, you could still insure it, your tenant improvement and betterment for your leased space. And the reason that's critical is if this building burns down and Four Lakes Veterinary needs to move to a new location and the new landlord says you have to pay for this out of pocket, they may have to take out a loan where they could insure it under their business policy. Inventory and property. A lot of times veterinarians will buy more equipment. This is an awesome practice that runs they have 30 employees running out of this one operatory. They run a very efficient operation. But they have a lot of equipment packed in here. They have a lot of equipment in other spots in the practice. As you can see, this veterinarian has a ton of inventory of pharmaceuticals, medications. And so this is all going to be covered under your business personal property. So not just your lab equipment, your surgical equipment, but also your inventory, all of everything in the drawers, all of your surgical equipment, your exam tables, generally anything not permanently attached to the structure. Now, this I would consider business personal property. And X-ray, even though it's permanently mounted to the building, I would have that as business personal property. So you want to have figuring out how much money you need to replace your practice equipment and inventory. This is often underinsured. The reason for that is you buy the practice, you start a practice, you've been in practice for a number of years, you bought the insurance, and then all of a sudden 10, 15 years goes by, 5 years goes by, and you have bought a cold therapy laser. You have built out you took out the kennel and turned that into a dental suite. You have upgraded your X-ray. You had IDEX give you a whole bunch of free lab equipment. All of those things happened from when you first bought the policy, and it adds up very quickly. It's very easy to add $200,000 or $300,000 in practice equipment and inventory very quickly and not tell your insurance agent. And so just making sure that on an annual basis that if you do buy, have some capital improvement, do buy some new equipment, that you are informing them that you are needing to increase that. A lot of times, if you're leasing a piece of equipment, that will or you'll update your policy when that occurs. However, it's important to make sure that you are informing your insurance agent when you are buying new, larger pieces of equipment, even if you're paying cash for them, to increase your insurance so that you don't have a gap in coverage. So BPP, business personal property, all of your practice equipment, all of your practice inventory, often underinsured. So just keeping up with this on an annual basis. When you get your policy, just look at your policy declarations page. It will say business personal property or BPP, and whatever that number is, that's how much the insurance company is going to pay out. The thing that you want to keep in mind is the cost to replace it now. Spoilage for vaccines, as I mentioned earlier, and then considerations for any property that may leave your practice. So property in transit. Some policies and most policies will cover up to $20,000 or $30,000, $50,000 for property that leaves your practice. But if you've got a $75,000 piece of equipment that may leave the practice, ultrasound or a group of equipment that leaves the practice, you want to make sure that that's covered adequately. And then again, cost to replace now. If you've got an old digital X-ray, but it would cost you, 2/3 more to replace that in today's dollars with a like and kind similar X-ray, a modern X-ray, you're going to want to make sure that you've got that modern X-ray, the new X-ray value covered, even though the old X-ray maybe cost you 30 grand used when you bought the practice. Especially at practice acquisition. If you're buying a new practice or you're new to practice, that old policy the other veterinarian may have had when you bought the practice, that may have been 5, 10, 15 years old. And so valuing the property now and what it costs to replace now versus what you when you purchased the practice or what the prior veterinarian had on it. So that wraps up business personal property. Moving into the next piece of the puzzle. I won't spend a ton of time here. But veterinary professional liability insurance, it's going to cover your professional liability, which is, I've got a cat, Louie, awesome little dude. If something happens and you were at fault for something going wrong with his treatment or care, and I needed to take him to an emergency vet to fix what you did wrong, that emergency care would fall under this veterinary professional liability. It's also going to cover license defense and animal bailey. If you're a veterinary practice owner, your policy will cover the practice itself and you, and then every veterinarian in the practice should buy their own policy. You can also purchase this under a business owner's policy and protect every veterinarian in the practice. You can buy this from a third party. AVMA PLIT does about 70,000 veterinary policies a year. There are some other third parties out there that do sell veterinary professional liability besides the AVMA. And then, as we all know, CVTs, VTs, assistants, front desk staff, everyone falls under the treating DVM. And so it's important that every DVM has the same limits within the practice. I've seen an example where we have 6 different veterinarians at a practice with 6 different limits of insurance. You want to collect a copy of their insurance at renewal if they're all buying their own policy, and you want to set a minimum coverage requirement for your practice, because if a technician walks into exam room 1 and I've got $1 million in coverage, and then they walk into exam room 2 and Dr. Megan has $2 million in coverage, there's a difference in how much protection your staff has from exam room to exam room. So setting a minimum limit of coverage for the practice. One last note on veterinary professional liability is that the license defense is one of the most critical parts of the coverage, because generally this professional liability, these claims are going to be $5, $10, $15,000 on the high end max, maybe 60 for care. But for most companion practices, it's not going to be a huge claim on the professional liability, which is why the premium's so low, generally $500. This license defense is going to protect you when Louis, winds up needing to be euthanized, doesn't wake up from anesthesia, has a bad reaction to anesthesia, winds up needing to be euthanized, or doesn't wake up, has a bad reaction. I get really upset because Louis was a shelter cat. The animal bailey coverage gives me $150 to go buy a new Louis, and the veterinary professional liability paid for the euthanasia. I'm left with really nothing. And so then I get upset and I turn you into the Board of Animal Health in your respective state. So you've now got to defend your license in front of the Animal Review Board. So this comes with every policy. License defense and animal bailey are optional coverages. So making sure that you've got this license defense and animal bailey as part of your professional policy is critical. And again, where to purchase, there's plenty of options for that. And then again, just making sure to set a minimum standard for the practice. If your practice is buying this policy and you have associates who do relief work or work as let's say they volunteer to spay neuter, they're going to want to buy their own standalone AVMA PLIT policy, because your policy under the business owners is only going to cover inside the 4 walls. All right, workers' compensation, very near and dear to my heart. Couple things to get started, just a few definitions. Rate of remuneration. It's the premium charge per 100 of payroll. So for every $100 of payroll that you pay your employees, you are going to owe the insurance company a rate of remuneration. That's set by the company or the state that you're in. In Minnesota, we have 8. The carriers set the rate based on the writing company. State of Wisconsin, New Jersey, and the majority of other states, it's set by the state. And so you're just paying the same no matter what type or style of practice you have. Remuneration is payroll. So it's the estimated payroll for the policy term. And then class code, the role in the practice, governing class code. For the majority of veterinary practices across the country, the governing class code is class code 8831. In the state of Minnesota, we actually split out and divide large animal and small animal and grooming. So grooming is 8831, companion animal practice or small animal veterinary is 8844, large animals 8845, and they charge different rates per 100 of payroll. I really like workers' compensation because it's very simple to understand how much premium you're being charged. All the other insurance is a rate per 1,000 or based on revenue, based on square footage. And it's I wouldn't say subjective, but it varies from company to company. It's hard to get the actual calculation. A specific endorsement costs $500 with one company. If you're buying a similar set of coverages with another company, it's, 750. But with workers' compensation, it's your remuneration divided by 100 times the rate of remuneration, and it gives you your payroll. So for all my practice owners and practice managers out there who pull their hair out every audit and every renewal and go, I don't know why I'm being charged what I'm being charged. I have no idea what's happening with my audit. I don't know what's going on. This is how the insurance company calculates your premium. So, state of Minnesota, we're going to use 8844 small animal veterinary payroll of 750,000, $1.26 per 100. 750,000 divided by 100 is 7,500 times 1.26 is a premium of 9,450. Now there's some other fees and some things that get tacked onto this, but if I'm underreporting payroll and I'm really running $1 million in payroll, I'm underreporting my payroll by about $2,500 a year, a little bit more than that. And so what happens when I complete my payroll audit, the insurance company is going to capture that underreported payroll. Now, let's say I hire a veterinarian, 2 associates, 2 months after the renewal. You can actually go back, contact your agent and say, hey, I just hired 2 agents. I know my policy just renewed. I need to add about $250,000 in payroll to this year's policy. So then you're paying that over the 12 months or 11 months or 10 months left on the policy versus having that all be captured at the audit at renewal and just owing the insurance company that fully earned premium, meaning it was for the prior policy term. And so if you're underreporting or misclassifying your payroll, if you have a high rate of remuneration, or you're having trouble with your payroll audits, that's why you're going to have trouble with your premium for work comp and going, I just don't understand. I don't know why my my premium went up. I just don't get it. The other thing that happens with veterinary practices or businesses in general is experience rating or experience modification. And this is a credit or a debit. A credit is a discount. A debit is a surcharge. A credit or a debit applied to the policy if your premium is over a certain dollar amount and you have qualified for this experience rating. It's your claims and payroll of an average practice over a period of time. And it can increase, decrease, or cause no charge in your premium. So experience modification, the policy dates used. So what would happen is they're going to take the 2021, 22, and 23 claims data, skipping 2024 because we might have some claims that are open waiting for these to be closed, and they're going to fall into the 2025 policy term. It's going to be the 3 complete prior years experience, so 21, 22, 23, skipping the most prior year, and it's going to be payroll and claims data. What happens is a very complicated formula, and by very complicated, I mean it's like 7 different calculations to come up with your calculation for experience rating. So you might have a 0.85 experience rating, meaning they're going to take your premium, that 9,450 times 0.85. So you're going to get a 15% discount. If you have a bunch of claims that occur and hit and come on during these 3 prior years, so let's say 2023 was a bad year and I had a whole bunch of claims and I went from 0.85 to 1.05. It's actually going to be a 20% change in my premium. So I'm going to go from 0.8. They're going to take that $9,400 times 0.85. They're going to multiply it times 1.05. So it's going to be a 20% surcharge. So a lot of times that's what happens with a premium change at a renewal is you're getting this experience modification change. And so keeping track of claims and what occurs with claims, which we'll chat about in just a moment, is very critical to your practice. If one thing we know about veterinary practices, you are going to have claims. It's trying to keep those as low as possible, manage a safe practice. I am a big fan of fear-free because that just is going to reduce employee injuries. As I mentioned, the employee injury we had yesterday was a very bad one. It was slip and fall with a fractured ulna. Basically just destroyed their arm. And so that is going to probably have an impact on their experience modification. One One thing to do with claims, because again, we know that claims happen. You want to institute a sundown rule or end of day rule. All claims must be reported, or I'm sorry, all injuries. All injuries must be reported, regardless of whether or not the employee needs to go to the doctor or not, the same day the injury occurred. You don't want to find out on Tuesday that I slipped and fell on Thursday, hurt my knee. I hurt my knee on Thursday, but I was out snowboarding all weekend. And now Tuesday, I can't walk. Well, did I hurt it snowboarding or did I slip and fall? It was in the back. No one saw me do it. And so you want to have this claim reported the day it occurred, the injury, the day it occurred, even if I don't need to go to the doctor. You want to collect an incident report for all injuries the same day they occurred. Who, what, when, where, and why. All work comp carriers have an incident report form that you can have on hand. And, blame the insurance company. Say the insurance company requires me to collect this on all injuries. They require us to collect it the same day. And then you use this during staff meetings. Hey, we have a lot of injuries happening where no one needs to go to the doctor, but how to run a safer and better practice. If this gets out of control, we have one practice with like a 1.7 experience modification. So their $10,000 premium is actually $17,000 a year from a round numbers perspective because of that experience modification. So keeping track and a handle on injuries is very critical. The last component to injuries when they occur is having that employee recover at work, not at home. If you've ever been home during the day and you've turned on the television, you are going to see ad after ad after ad for personal injury attorneys telling employees, we will get you all the money you have coming for your work comp injury. Not car accidents during the day, it's work comp claims. So you want that employee recovering on the job. They're not accruing lost wages, which does increase the cost of the claim. So just because they're sitting at home, you're not paying them, but the workers' compensation policy is. And that drives up the cost of the claim, which will affect the claim experience rating and therefore your claims history. So recovering at work is very important. Having all injuries reported the same day, and if they need to go to the doctor, having that claim filed with the insurance company within 24 hours has proven statistically reduced the overall cost of the claim the faster the injury is treated. If you have somebody hurt and they're telling you 2 weeks down the road, I bet if we close our eyes, we've worked at a practice and we think, yeah, so-and-so got hurt. They reported the injury 3 weeks later, and it was like they never came back to work, or it was a really bad claim. If they had reported that claim the same day it happened, got medical treatment the same day it happened, that claim would probably be 20 to 30% less cost overall. So these are three things that a practice, injuries are going to occur. People are going to get by cats, dogs, fractious cats, all of those things. But if you do these three things, it can help overall reduce your claim costs. We're going to rip through the last four here. Cyber liability. Everyone's computer is a ticking time bomb. 82% of breaches involve human error, so we are our own worst enemy. Greatest cyber threats for your practice are going to be social engineering. That's me tricking you into replying to an email and paying an invoice to IDEX, even though it's bill@supereagle.com/IDEX. Pay this invoice for $12,393.83. Goes into my bank account, not IDEX. That's a social engineering claim. Phishing and spear phishing. This is email hacking emailing where I'm getting you to click a link and then downloading malicious software onto your computer, and ransomware. And what happens is the cyber criminals will trick you here, and then they will figure out when you have the most money to social engineer you, because they just hang back for like 6 to 9 months watching money flow in and out of your practice. And then they'll figure out, yep, the 13th of the month is when they have the most money in the bank, so we're going to ransomware them on the 12th, and you pay us $50,000 in Bitcoin, or we delete everything and turn all of your computers into garbage. So it's tricking you into sharing. There's many other types of cyber incidents, but really these are kind of the three biggies that most small businesses, and unfortunately small businesses under 10 individuals are some of the most targeted these days. It's not the Targets or Home Depots or Visas of the world. It's small business, because we just don't have the cyber protection that these large corporations have, the IT departments. You can roll on cyber coverage to your existing business owner's policy. It's garbage. I don't recommend doing it. You would be sorely disappointed and think that you have coverage, but you really don't. So adding coverage to your existing business owner's policy, this was going to be your experience as junk. This is basically what you're going to get. You're going to get cyber breach response of $50,000 to $100,000. You're going to pay about $500 a year for this from your existing carrier. I highly recommend buying a standalone policy. You're going to get all of these coverages and more. Generally, you're going to get $1 million in coverage versus 50,000. I quoted a veterinary practice yesterday, 1.8 million in revenue, $1,600 a year to get these coverages. So, making sure that you've got an adequate cyber policy is very important. Business auto. Most practices don't own a commercial auto, so we're buying hired and non-owned auto as part of the business owner's policy. It gets endorsed on. Every practice must have this coverage. It's generally rated based on the number of team members, and it's an essential protection. Hired auto covers those hired autos. I was just down at WVC in Las Vegas. Didn't rent a car, but if I had, this coverage on my business owner's policy would cover that car rental under my business versus personal. Non-owned auto is if you don't own, lease, or hire a vehicle and your employee used their vehicle for business activities for the practice. Those are non-owned autos. Practice manager running an errand, heading to grandma's house to do an in-home euthanasia. Those types of risks are going to fall under non-owned autos. Employees' personal auto covers them. So if I'm the practice manager, I'm driving to Home Depot or I'm going to pick up paper at Costco or whatever errand I'm running, and I get in a car accident, and that other party finds out that I was driving my vehicle in the course of business, they're going to sue me personally. My personal auto policy will cover me, but I'm also going to sue the practice because attorneys are smart and they know there's a lot of money. Think about that liability coverage. So you want to have non-owned auto coverage to protect the practice. Very inexpensive insurance, $300 to $400 a year. It's an endorsement onto either a business owner's policy or mobile or mixed practices. Obviously, completely different exposure. You're doing a commercial auto policy. You've got a lot of permanently attached equipment in the vehicle. Vehicles are higher value. This is obviously a dated photo. Now we're seeing the mobile practices that are out driving around doing the surgery in driveways. We insure a mobile CT that will go to a veterinary practice and do a CT in the parking lot at the vet practice. So vehicle values are higher, rated based on distance travel. Listed drivers, unfortunately, if there's a 17-year-old driver in this household and you're using this for personal use, that 17-year-old, if they ever drive this, is going to be listed on this commercial auto policy and totally screw up your rate. So just be aware that if you do ever buy a vehicle in the business name, it's going to need to be insured under the business. And if you're using that personally, your youthful operators at home may need to be listed. The other thing is if you're using your personal vehicle for business use, that's going to be more than commute use. And you're just going to want to check with your personal insurance agent to make sure that your personal auto is insured adequately. All right, home stretch, last two. Life and disability insurance. So life and disability insurance are critical for every practice owner. I think every veterinarian should have these two policies. There's both personal and business aspects to both of these, which I'll cover. But every veterinarian should have these two policies at a minimum. With the game of life, we don't want to gamble. I was just down in Vegas. Don't gamble with your life. Some of the big reasons to purchase life insurance, especially as a business owner or an associate veterinarian, final expense coverage, paying for those final expenses. They're not inexpensive these days. Obviously covering your personal debt, student loan debt, credit cards, home, kids' college debt, like whatever you want to cover with your personal debt, just to have a clean slate for your surviving family. Critical one is income replacement. For higher wage earners like veterinarians, you want to replace your income. And I'll talk about the thought process behind this in a moment. Transfer of wealth for your surviving family. And then on the business side, key person. So ensuring a key person at a practice, buy-sell agreements for business partners, acquisition and perpetuation, attracting, hiring, and retaining talent to your practice, and then business loans. If you do take out a business loan, the bank is going to want to make sure that if you die, that they're getting the loan repaid, and they're going to do that with life insurance. So how much to buy? That's always the question that, we get asked, and veterinarians go, I don't know how much to buy. The bank's telling me I need $1 million. Okay, well, that covers the bank. How much do you need? House 300,000, credit cards 15,000, cars 35,000, student loans 250,000. So your insurance needs are 600 grand. But if I buy a $600,000 life policy for 30 years and I die, average veterinary income in 2021, older number, but this is the national average, was 107. At 107, and our debt costs at 600,000, that's 5.6 years. That money lasts 5.6 years. After 5.6 years, the money runs out. So what the thought process is, my surviving spouse is using, we're currently using this $107,000 every year. We're generally spending the majority of it on home, cars, all of those things. And if I die, that money runs out after 5.6 years. But if I want to replace my income for 10 years, so if I say I want my wife to be able to not have to work or not have my income replaced at $107,000 for 10 years, I really need $856,000 in life insurance. Or if 20 years, 1.3. And if I want her to get $107,000 for the rest of her life, I need to buy $1.8 million in coverage. Because if you take that 1.8 million or any of these, and you invest it with a 6% rate of return, you're going to get this amount of money for this amount of time, 107 for this amount of time. And so it's really about talking about income replacement versus just covering what the bank needs or covering your debt, because that money will run out sooner than you think, because your surviving spouse is just going to spend that $100,000 like you're still alive. So here's just an example of what a $2.5 million 30-year term policy is for a 25-year-old female, fresh out of vet school, preferred non-tobacco, annual premium $1,100 a year. So basically $100 a month buys you $2.5 million in term coverage. That gets her to age 55. And so, a little bit more expensive the older you get. Obviously, you're closer to death, unfortunately. But this is really an inexpensive way to protect income and assets. Business uses of life insurance, buy-sell agreement for practice perpetuation, for business partnerships, key person for associates or practice managers. I can buy an insurance policy on key individuals at the practice in case something happens to them. I've now lost that revenue of that associate who's generating $1 million in revenue to the practice every year. I can't replace that snap of the fingers. It's a tight hiring market, and so tight job market. So I could take out $1 million life insurance policy on one of my employees, one of my associates. They die, I could use half of that to cover 6 months worth of their lost income as a veterinarian, and have a $500,000 signing bonus, $250 after year one and $250 after year two, or $250 up front, however you want to structure it. But you can buy life insurance on your key people in the practice. Deferred compensation, there's some insurance policies you can use to recruit, hire, and retain. And then collateral assignment of life insurance. The bank's going to want to see you have life insurance to cover your business loans. Disability insurance, very important for veterinarians to have to protect their business income. There's short and long term. It's going to be different amounts of time, 12 to 36 months, or benefit to age 65 or 67. You have to wait a little bit longer to get these longer benefits. For long-term, 0 to 7 days or 90 days, but it's going to be 60% of your income. So if you're making $150,000 a year, you're permanently disabled, you could get 60% of your income paid to you until age 65. So these are critical policies to have as well if you're a veterinarian, to protect your income personally and on the business side. Business overhead policies can cover business revenue and income for items like utilities, property liability, office maintenance, salary of employees, that sort of thing. These are starting to be more lender required, and they're important for small practices or solo DVMs to make sure that you're covering your business expenses in case you can't practice because of a disability. Some business uses of disability. Again, we can take out a disability policy on associate DVMs, business overhead, and again, it may be required for business loans. So Just my word today. Please review or purchase your life and disability insurance. Protect your most valuable asset, your life and your income. Other things can be replaced. Your family, if you're gone, can't replace your income. And so these are generally inexpensive policies in the grand scheme of things, and it's important to have. Home stretch. Last item, last piece of the puzzle, employment practice liability insurance. These are employee-driven lawsuits covering employers, current and former employees, volunteers, leased employees, directors, and officers, corporate entities. So basically anyone involved in the practice for things like actual or alleged active harassment. The alleged part's critical. Actual or alleged acts of discrimination. The alleged part's critical. Actual or alleged wrongful dismissal, discharge, or termination. So basically any employee-driven lawsuits, this employment practice liability coverage is going to protect you. Violation of Fair Labor Standards Act, misrepresentation. I hire Megan to be my practice manager at Butler Veterinary Practice. And the first month she works for me, I said, yep, I need you to be my practice manager. And she spends the first month cleaning kennels. She feels that I misrepresented the job. She decides to sue me. Absolutely can happen. It's probably going to cost me $40,000 or $50,000 to $80,000 a year. I'm sorry, to defend that case or settle it. You're going to pay 1 year salary. Sorry, you're going to pay 1 year salary plus some legal fees. Libel, slander, humiliation, defamation, invasion of privacy. Say I call out an employee at a team meeting. They start crying, and I give them a harder time for it. Unfortunately, veterinary practices are high-stress environments. You're dealing with compassion fatigue, longer hours, higher turnover of employees. And so these employment practice policies are very critical. Failure to employer promote. Deprivation of career opportunity, wrongful demotion, negligent evaluation, wrongful discipline. And this isn't whether I think it's wrongful discipline or failure to promote or deprivation of career opportunity. It's the employee thinking that they were not promoted, that I didn't give them a career opportunity, that I gave a negligent evaluation, or that I disciplined them. It's how they feel, not what actually occurred. You can buy roll-on coverage. This is a little bit better than cyber coverage. You can get a higher limit. So again, the settlement case, you're going to pay $50,000 to $80,000. Unfortunately, we're seeing these creep up just with how much litigation is happening now. So $100,000 is the minimum you should buy. You should buy this no matter what. Third party and defense are generally not offered. And so the defense costs are going to fall under this 100,000. If you have too high of a head count or payroll, you won't be eligible for this coverage as part of your business owner's policy. So you're going to need to buy a standalone policy. 250,000 and up generally will sell $1 million. It's going to offer third party coverage. Let's say that IDEX rep comes in and sexually harasses the front staff. You didn't do anything about it. And now your employees sue you. Oh, I need third-party coverage. Defense costs outside policy limits. So the defense, your legal defense covers you outside of this. And these policies are generally going to offer more tools and resources. All right. It's time for the $64,000 question. Who found value in what we covered today? I've got a free resource for everyone. If you'd like, you can send me an email, bill@butlervetinsurance.com. If you do not have a copy of my book, because you are a Granite Peak preferred client, you're on this webinar, I will send you a copy of my book as a free giveaway to you, Butler Vet Book. So free resource for you. I will send you a copy of my book. So I'll mail that to you. Megan didn't know I was going to do that, but we'll send it. We'll send it to you because you are interested in insurance, and I'm happy to help the veterinary community. One other thing, so I'll just Butler Vet Insurance, bill@butlervetinsurance.com. I'll give everyone a chance to scan the QR code if they so choose. In just a minute. All right. I do have a podcast. Megan has been on the podcast. This is a very listened to episode, but my most recent episode was with Dr. Temple Grandin, kind of a pinch me moment. If you want to subscribe to that, we cover business principles, so not insurance stuff, just general business practice and principles for veterinary practices. So if you want to subscribe to that, I'll leave that up for another second. It's on all the major platforms. And then just a big thank you to Granite Peak for having me on today to share my knowledge and advice on insurance. Obviously, we tried to crush. This is normally 4 separate blocks of CE that we jammed into 1 hour, actually 52 minutes. So good job for those of you who hung on.
Bill was amazing. I know, I mean, I had already read the book and learned so much. Like you are such a resource for us and so generous to all of our clients. So super appreciate that. Next month our webinar is with Rob Best and he's empowering
Ooh,
our team, right? That'll be fun. You guys were a great audience. Appreciate the questions. Bill, lovely as always.
thanks for
Thank
the
you so
opportunity to nerd
much.
out on insurance.
We love it. Knowledge is power, right?